Hey everyone, welcome back to Corporate Decoder, the place where let's just say Zoomcar's financial report is more of a choose-your-own-adventure than a straightforward story. Buckle up because we're diving in. Zoomcar, a car-sharing company, just released its report for the quarter ending December 31st, 2024. The big news? They're still losing money, and there are some serious concerns about whether they can stay in business. We're going to break down the numbers, the risks, and what it all means for investors. First, who are these guys? Zoomcar is a company that lets you rent cars from other people, kind of like Airbnb but for vehicles, bodies. They're based in India, but they're trying to expand to other countries too. The report is called a 10Q, and it's basically a quarterly checkup for publicly traded companies, like Zoomcar. It tells us how the company is doing financially. Let's start with the basics. Think of the balance sheet like a snapshot of Zoomcar's stuff and debts. They had about $4.4 million in cash, which isn't a lot for a company trying to grow. They were owed about $97,000 by customers. But here's the kicker. They owed a whopping $20.6 million to other companies. That's like owing the bank way more than you have in your wallet. They also have to pay about $3 million in debt within the next year. Adding it all up, their total current debts are about $46.8 million. Zoomcar's total stuff to sell and use to make money was $9.5 million. Total liabilities for Zoomcar were $47.9 million. Total negative equity for Zoomcar is $38.4 million. Moving on to the income statement, which is like a report card for how much money the company made and spent. For the last 3 months of 2024, they brought in about $2.4 million in revenue. But it cost them almost $5.7 million to run the business. That means they lost money, about $3.2 million, from just running the business. Then, they had to pay another $4 million in interest on their debts. All that together, their total loss for the quarter was almost $8 million, not a great report card. Their loss for common stockholders is $7.9 million. The loss attributable to stockholders for the 9 months ending in December 2024 was $13.8 million. And the total comprehensive loss for Zoomcar is $7.5 million. Now, the statement of stockholders' deficit sounds complicated, but it just tracks how the owner's stake in the company changes. Zoomcar has a big accumulated deficit, which is just a fancy way of saying they owe more than they own. The cash flow statement tells us where Zoomcar's cash came from and where it went. It shows that they used about $5 million in their day-to-day operations. They did make a little bit of cash, about $463,000, from selling some stuff. But the real cash came from borrowing more money or selling stock. They got about $7.7 million from these activities, ending with $4.5 million in cash compared to beginning with $1.4 million. Here's where it gets a little scary. The report says there's substantial doubt about Zoomcar's ability to continue as a going concern. That's business speak for we might not be able to stay afloat. The accounting policies talk about how they prepare their financial statements. Nothing too surprising here, just the usual rules. It's important to note that these numbers are just estimates, and the real results could be different. This makes it harder to rely on these reports. Zoomcar makes money by connecting car owners with people who need a ride. They get a cut of the rental fee. It's like being a matchmaker for cars. They also have to deal with bad debt where people do not pay. Zoomcar sets aside money for this. Balances with government authorities is about Zoomcar being owed money back from the government. Assets held for sale is where Zoomcar puts old stuff they plan to sell back. They always measure it at a lower price. Their debt consists what they own to different entities. When Zoomcar hands out warrants, these will be options given to the public to buy their shares at a certain price. When they measure the value of their financial stuff, they look at the selling price. Level 1 is where they have a price. Level 3, they have to guess. They also will try to take the debt and make the deal better to help the business out. This becomes a troubled debt restructuring. Since Zoomcar operates all together, they only have one segment. To make the price easier to read, they reversed stock split. If you had 100 shares, you now have wow. Zoomcar's report has been updated to better reflect new account pronouncements. The report adjusts numbers from before to reflect the share split. Zoomcar is trying to fix their financial deals, and these are changes made to them for better rates. Cash and cash equivalents is the actual money they have. This section is how to value payments they expect to receive. This has to do with them not knowing they will receive credits from government that they are counting as money. This is about putting money away and long-term investments. Other current assets is all other stuff that is not cash. This is the value of their current assets being measured. Property and equipment. Net are all the stuff and things they use to run the business to include things on lease. Here is the amount they own on their leases. More long-term investments. Other non-current assets that are not cash. What they owe other companies. Here is a list of all debt. The debt owed to related parties. What they must pay for a convertible note that was unsecured. More descriptions of their liabilities. What they owe. Details on income/loss. Explaining types of stock and who has more. More with stocks and stock types. Breaking down where their income is and what makes it. The location of their income generation. All the finance charges involved. Describing and breaking down what other types of fees the company has. The breakdown of where the revenue is and what types of rules it follows. Describing losses. What happened and what is attributed to. Employee benefit plans includes what the company offers to employees. This section tells you who at the company is related to the company. Now, for a quick recap, Zoomcar is struggling. They're losing money, they have a lot of debt, and they're not sure if they can keep going. They're trying to turn things around, but it's an uphill battle. So, what's my take? On the one hand, Zoomcar is trying to tap into a growing market for car sharing in emerging economies. On the other hand, they're facing a ton of challenges. Lots of debt, a shaky business model, and tough competition. Valuation? Honestly, it's hard to say what this company is worth right now. They don't have consistent profits, so traditional metrics like price to earnings don't really work. But one thing is clear, Zoomcar has a long way to go before it's a safe investment. Based on their current financials and the high level of risk involved, my recommendation is to stay neutral. There is no recommendation of value on this stock, and as always, do your own research. If you found this helpful, hit that like button, subscribe for more corporate deep dives, and let me know in the comments what company you want me to decode next.